Digital risk management is the systematic process of identifying, assessing, mitigating, monitoring, and governing risks arising from digital technologies, artificial intelligence, AI, cloud computing, cybersecurity threats, data ecosystems, automation, digital platforms, and technology-enabled business models. As organizations accelerate digital transformation and become increasingly dependent on interconnected technologies, digital risk has emerged as a strategic enterprise issue that extends beyond information technology into corporate governance, financial management, operational resilience, and long-term value creation. For modern chief financial officers, CFOs, digital risk management has become a critical executive responsibility because technology-related risks can significantly affect financial performance, regulatory compliance, business continuity, investor confidence, and organizational reputation. Leading executive CFO programs emphasize that digital transformation creates enormous opportunities for innovation, productivity, customer engagement, and competitive advantage while simultaneously introducing new forms of risk that traditional governance frameworks may not adequately address. Artificial intelligence, cloud computing, Internet of Things (IoT), blockchain, robotic process automation (RPA), digital ecosystems, and platform-based business models increase organizational complexity and expand potential vulnerabilities across technology infrastructure, data assets, third-party relationships, and operational processes. CFOs therefore play an increasingly important role in integrating digital risk into enterprise risk management and strategic decision-making. The primary objective of digital risk management is to enable digital innovation while maintaining acceptable levels of enterprise risk and governance discipline. Rather than preventing digital transformation, effective risk management creates confidence that technological investments support sustainable growth without compromising security, compliance, operational stability, or stakeholder trust. Modern organizations seek to balance innovation with resilience through proactive governance frameworks and continuous monitoring. Digital risk encompasses multiple interconnected categories. Cybersecurity risk involves unauthorized access, ransomware attacks, phishing campaigns, data breaches, and technology disruptions that threaten business continuity and financial assets. Data risk includes poor data quality, privacy violations, inaccurate analytics, and governance failures affecting executive decision-making. Technology risk arises from system failures, software defects, infrastructure outages, legacy systems, and implementation failures, while third-party risk originates from suppliers, cloud providers, outsourcing partners, and digital ecosystem participants. CFOs increasingly evaluate these risks collectively because they often interact across financial, operational, and strategic dimensions. Enterprise Risk Management (ERM) provides the governance framework within which digital risks are evaluated and managed. Organizations identify digital risks through structured assessments, evaluate likelihood and impact, establish risk appetite, prioritize mitigation efforts, and continuously monitor key risk indicators, KRIs. CFOs contribute by integrating digital risks into financial planning, investment decisions, strategic forecasting, and board reporting while ensuring that technology initiatives align with enterprise risk tolerance and long-term value creation objectives. Artificial intelligence has significantly expanded the scope of digital risk management. AI systems support forecasting, financial planning, fraud detection, customer analytics, automation, and executive decision-making, but also introduce algorithmic bias, model inaccuracies, explainability challenges, data privacy concerns, and ethical risks. CFOs increasingly collaborate with technology leaders to establish AI governance frameworks that ensure transparency, accountability, model validation, human oversight, regulatory compliance, and responsible AI deployment throughout the organization. Cloud computing has become another major source of digital risk requiring executive oversight. Cloud platforms improve scalability, flexibility, collaboration, and operational efficiency while introducing risks associated with vendor dependency, data residency, cybersecurity, business continuity, regulatory compliance, and service availability. CFOs evaluate cloud investment decisions by considering not only financial returns but also resilience, security architecture, contractual protections, disaster recovery capabilities, and long-term operational sustainability. Data governance forms a fundamental component of digital risk management. Organizations increasingly rely on enterprise data to support AI applications, predictive analytics, financial reporting, sustainability disclosures, customer engagement, and strategic planning. Weak data governance can result in inaccurate forecasts, regulatory violations, poor decisions, and reputational damage. CFOs therefore support governance structures that define data ownership, quality standards, master data management, metadata controls, access rights, and privacy protections that ensure enterprise information remains trustworthy and secure. Digital ecosystems and third-party integration further increase organizational exposure to risk. Modern organizations exchange information continuously with suppliers, logistics providers, financial institutions, customers, regulators, cloud vendors, and digital platforms. Third-party cybersecurity weaknesses or operational failures may directly affect enterprise performance. Effective digital risk management includes vendor due diligence, cybersecurity assessments, contractual security obligations, continuous monitoring, and contingency planning that strengthen ecosystem resilience and operational continuity. Financial risk management increasingly incorporates digital considerations. Cyber incidents, technology failures, data breaches, or AI errors can generate direct financial losses through operational disruption, legal liabilities, regulatory penalties, remediation costs, reputational damage, and reduced investor confidence. CFOs use scenario analysis, stress testing, sensitivity modeling, cyber insurance evaluation, and financial contingency planning to quantify digital exposures and strengthen organizational preparedness.
Digital risk management also supports business continuity and operational resilience. Organizations establish incident response plans, disaster recovery procedures, backup systems, cyber crisis protocols, and resilience testing that enable critical operations to continue during technology failures or cyber incidents. CFOs contribute by evaluating liquidity requirements, financial contingency measures, recovery investments, and capital allocation strategies that support organizational continuity during digital disruptions. Automation and intelligent technologies require strong governance controls. Robotic process automation, AI-driven workflows, and autonomous decision systems improve productivity, but may create operational, compliance, or control risks if poorly designed or monitored. CFOs ensure automated financial processes maintain segregation of duties, auditability, internal controls, and regulatory compliance, while balancing efficiency with governance discipline. Environmental, social, and governance (ESG) priorities increasingly recognize digital governance as an essential dimension of corporate responsibility. Investors and regulators evaluate cybersecurity resilience, privacy protection, ethical AI deployment, digital inclusion, technology governance, and operational resilience alongside financial performance. Strong digital risk management enhances organizational reputation while supporting long-term stakeholder confidence and sustainable value creation. Digital culture and workforce capability are equally important. Organizations require employees who understand cybersecurity awareness, data privacy, responsible AI use, digital ethics, and risk management practices. CFOs support digital capability development through executive education, governance training, cross-functional collaboration, and leadership programs that strengthen organizational resilience while promoting responsible innovation. The Global Competency Framework identifies enterprise risk management, governance, digital capability, data analytics, strategic thinking, leadership, business partnering, communication, performance management, and organizational transformation as essential competencies for executive finance professionals. Modern CFOs are expected to integrate digital risk management into enterprise governance by aligning technology investments, AI adoption, cybersecurity, financial stewardship, and strategic leadership to support resilient and sustainable business performance. In today's technology-driven global economy, digital risk management has become a strategic leadership discipline rather than a technical compliance function. Organizations whose CFOs successfully integrate digital governance, cybersecurity oversight, AI risk management, cloud resilience, enterprise data governance, and strategic financial leadership into enterprise risk frameworks are better positioned to accelerate digital transformation, strengthen operational resilience, protect stakeholder trust, and create sustainable long-term enterprise value in an increasingly interconnected digital world.